Depreciation. We have depreciation dealt under different acts. Section 32 under Income Tax Act, Schedule 2 in case of Companies Act 2013. So we have different depreciation. So now we are talking about depreciation under audit. I will give one example so you can understand easily. This company, IFFCO company, follows method of providing depreciation as per section 123 of the Companies Act 2013 using the lives prescribed as per schedule 2 of the Companies Act. That is correct. It has provided depreciation on computers which are used during all 3 shifts. So we have, if there is a 2 shifts, 50%, 3 shift, you know that 100%. So in case of depreciation computer which are used during all 3 shifts using the rates stipulated for continuous process plant, since these assets are used for 24 hours. So 3 shift consider for the computers as a continuous process. They charge the rates as per that continuous process plant. Is that correct? We have to comment. This is the comes under audit. For that we have to know section 123 schedule 2 and schedule 2 of the Companies Act. So what about the section talks about mainly I can remember section 123 that prohibits the company from declaring the dividend out of its profits before providing for depreciation in the manner laid down in the section. So before declaring the dividend, they have to set off or provide for depreciation. That is as per section 123. So without considering depreciation, no dividend. That is as per section 123. It also provides that the dividend shall be declared or paid by a company for any financial year out of the profits of the company for that year arrived at after providing for the depreciation in accordance with the provisions of the schedule 2. Schedule 2 always consider useful life. Schedule 2 of the Companies Act 2013. These are the key points. Useful lives. Useful lives to compute depreciation. So as per that they have to charge or provide depreciation. So schedule 2 provides the useful life of an asset that shall not ordinarily be different from the useful life specified in part C to the said schedule, that is schedule 2. The residual value of an asset shall not be more than 5%. So residual value shall not be more than 5%. So it should be cannot be more than 5% of the original cost. If it is a original cost is 100, it cannot be more than 5. Residual value cannot be more than 5. That is as per schedule 2 of the act. If a company does not use the useful life or the residual value of the asset as provided in the schedule 2, what happens? If a company does not use the useful life or a residual value as per the schedule 2, what happens? Then justification for the difference shall be disclosed in its financial statement. So if they are not following with regard to useful life or residual value, then what is required? Justification. Justification is required for the difference shall be disclosed in the financial statement. Where during any financial year any addition has been made to a asset, or where any asset has been sold or discarded or demolished or destroyed, the depreciation on such asset shall be calculated on pro rata basis, that from date of such addition or such as the case may be, up to the date on which such asset has been sold, discarded, demolished or destroyed. In that case, pro rata basis has to be applied. That is one more thing. If asset is used for a time during the year for double shift, as we explained, 3 shifts are explained in the question. In case of double shift, the depreciation will increase by 50%. So double shift, it will increase by 50% for that period. Okay, for that period. In case of the triple shift, what happens in case of a triple shift? 100%. Calculation is 100%. So the useful life or a residual value of any specified asset as notified for the accounting purpose by the regulatory authority constituted under this act or any act of parliament by the CG shall be applied in calculating the depreciation. If the specific authority is notified by the government for the depreciation, it has to be followed as per the irrespective of the requirement of schedule 2. That is, if a specific regulatory authority constituted by the parliament, then that act has to be followed irrespective of the requirements of the schedule 2. Very important. Schedule 2, this what needs disclosure in the financial statement about the depreciation method. Which method used for the charging depreciation, that has to be disclosed in the financial statement. That is one point. Second, useful life. So useful lives also should be disclosed. So useful life of the asset for computing the depreciation has to be disclosed if they are different from the lives specified in the schedule 2. This has to be disclosed when they are not following the schedule 2 depreciation method and useful life. So again, one more time, section 123, if a company has not provided depreciation for any financial year, it shall, before declaring or paying dividend, provide such depreciation either out of the profits of that financial year or out of profits of other financial years. So without providing depreciation, no dividend. So one more thing, section 197, ascertainment of depreciation for computing net profits for the purpose of managerial remuneration. When we calculate managerial remuneration, we need net profit, right? That time how to use depreciation? So under section 197 subsection 1 of the Companies Act 2013, depreciation calculated in the manner specified in section 198 of the Companies Act must be deducted for arriving at the amount of net profit. So there also depreciation has to be deducted. What about the question? Computers considered as a continuous process, three shift user, so they wanted to charge 100 percentage, but computers cannot be used considered for 100 percentage. Computers, first of all, computers cannot be considered for as continuous process plant. That is a default position, so they cannot charge even though it is used for three shifts. 100 percentage depreciation cannot be charged. That is 15C, right? 15C. So company follow the method of provide depreciation as per section 123 during the useful life prescribed as per is correct. Method of provide depreciation, yes, they have to charge. They use the useful life as per question mentioned, that is correct. However, they provide depreciation using the rates stipulated for the continuous process plant is not correct. Follows the method of providing depreciation as per section 123 of the Companies Act using the useful life prescribed as per schedule 2 of the Companies Act. This is correct, but it has provided depreciation on computers which are used during the all the three shift using the rates prescribed for continuous process plant. This is not correct. That is what here mentioned. They are have provide depreciation using the rate stipulated for continuous process plant is not correct. As per schedule 2, computers does not fall in continuous process plant category. Further, computers are included in NEST in part 2 of the schedule 2, which is category of assets in respect of which no extra shift depreciation is permitted. Therefore, though computers are used for 24 hours triple shift, but no extra shift depreciation permitted on the same. In the instant case, the company has provided depreciation on computers which are used during all the three shifts using the rates stipulated for continuous process plant as per its accounting policy is incorrect. It would have misleading results into material misstatement and hence impacting true and fair view. The auditor therefore should discuss with the management to make necessary changes in respect of the same. If not agreed, the auditor may qualify the report accordingly. This also be written. This for this 1 mark is there. So you can mention what is correct point of view, what is a not correct point of view, why it is not correct, explain the reason and the what is the outcome. They have to discuss with the management to make necessary changes in the respect of the same. If not agreed, the auditor may qualify the report accordingly. So this is with regard depreciation under audit. Thank you.